Is volatility a code word for when stocks go down, Victoria? Because you're still expecting December to be volatile, but not like last year.
That's right, Joe. I mean, we do expect to see some volatility coming in. It's for exactly what Becky was just talking about. When we look at this trade war, we're constantly getting new headlines coming out. We kind of thought that phase one was going to be done. I think the market had discounted that. Things were moving better. We saw Treasury yields go higher. We saw the markets across the board move higher. And now as some of that's coming back and we're not sure where we stand on these tariffs for December 15th, then the volatility is going to come back. I mean, look at where the VIX has been. A week ago, we were at one-year lows on the VIX. This week, we're at 8-week highs. So I'm not saying that we're going to see something like we did in last December, but I do think there's some volatility. So we'll have some pullbacks. We had this 2% pullback over the last few days. Wouldn't be surprised to see more of that as we get closer to December 15th. You know, there's a question as to whether Trump will go through with that. I don't think we can take it completely off the table, but perhaps even if they do go into place, we get some kind of carve-outs for companies like Apple or other companies that will really hit the consumer.
I like your stock pick. Or at least we can stay in the micro world, and because everything else at this point we hear so much. You know, everybody's got an opinion on what happens with trade and the market. But why Lennar? I talked to an individual yesterday that on another show about real estate, and housing is not supposed to be so great next year, and it has a lot to do with a lack of inventory. Is Lennar, where are they operating? Who are they selling to? And there's a big millennial story to what's happening in housing as well. Does that play into your recommendation for Lennar?
It does. I actually saw that interview that you did yesterday, and they were talking about millennials.
You're coming back. Can you?
She thought it was a great interview.
That was a really,
I did.
Really, Victoria?
It was great.
Thank you.
How
was the lighting back in?
Perfect.
Did I look good? But what about my hair? Look good?
Always good. Always
Thanks.
good, Joe.
Okay, so tell me. So did you see that? Were you? I didn't really understand how tight inventory means prices might decline.
Right. And I think they're just saying that people won't be out there buying because inventory is low. But really, Lennar plays into that space where they need to be building, right? On some of the lower end, some of the starter homes. Yesterday, when you were speaking about that, I think Diana Olick was saying that we've still got inventory on the higher end. It's the lower end where we really need it. And that's where Lennar plays well. That's why we've chosen that name in the housing sector. We've seen housing continue to do well. Yes, there's a little bit of pullback, but with mortgage rates as low as they are, we anticipate that that's going to continue higher. The trend is going to be higher, and especially in that lower cost bracket.
You're right. That's exactly what Diana, as you accurately pointed out, our real estate report. The other thing I thought was interesting, just the millennial angle. They've waited longer to do some of these things, like buying a home. But while they're not at the real ultra high end, they're not complete starter homes either. Right. They're moving into sort of the Lennar pretty nice house, I think.
What about geographic trends? Are they moving to new areas, new cities, new suburbs, and that's helping Lennar, and as well as the other home builders, Taylor Morrison and others?
Right. I mean, Lennar is geographically across the United States, right? They have opportunities everywhere, and we've seen that. I mean, we're here in Houston. We've seen our housing market grow continuously as people move into the city from the West Coast. We've had a big influx here into Texas. And so especially here in the South, we're seeing growth.
You also like Apple and Coca-Cola. Neither one of those, obviously, you didn't have to beat the bushes to find them, but Apple, that's going to continue. The whole Apple story continues even at $1 trillion and above.
It really does. I mean, when you look at Apple, that is a strong consumer brand. There's a lot of loyalty there. We actually, there was a lot of concern when the phone came out that there wouldn't be as much demand as anticipated, and we've actually seen that demand grow. The earbuds have been really good, and I think they'll pick up into the holiday season along with the new MacBooks that they have. And again, when we think of the tariffs on December 15th, a lot of people have chosen not to add to their Apple names because the potential that that's going to come in. We think we might get an exclusion there, and that will be good for Apple. So it's just a longer-term holding, just like Coca-Cola. Longer-term holding in the portfolio.
In a quick 20 seconds on Coca-Cola, you like it that it's more of a pure play, doesn't have all the snacks, but it does have all these new drinks as well, right?
Yeah, they have a lot of new drinks that are coming out. They're trying to branch into some new markets there where other companies like PepsiCo have been doing that. But look, again, it's one of these names that consumers like, that there's loyalty to. It's a longer-term holding in the portfolio. Think of it as a core holding. It was an add to in our portfolio, and we're comfortable with that, especially if there's going to be volatility going on for the next month or so. That's a great name to have.